So, Drew, I mean, listen, your job at MetLife is a little different than some strategists because your whole goal at a company like a MetLife is certainly just the preservation of assets. You're not trying to hit a home run, right? You want to just make sure that you guys have the money that you need for all of your clients out there. Is that fairly well said?
I think that's fair.
So when you look at a bond yield of 1.77%, where do you go? What do you do with that? Because that's not a lot.
Well, you start looking for different ways to get yield.
Safely.
Safely. There are different kinds of risks out there, and so you choose the risks that you're more comfortable with, and some of those offer better yields. And so that's the way you play that.
And where is an area that accomplishes those goals now?
Well, one of the areas MetLife has available to it is private assets, and you hear a lot about private assets nowadays, and there's a reason for it. It's because you can pick up some protections, and you can also pick up some additional yield. So in that case, you can actually reduce risk and get higher yield.
Are you bothered by this idea, perhaps, of a divided Fed, or could we say it's maybe good that they all just don't think the same way?
They may not all think the same way, but my guess is they'll do what Powell wants them to do. And I think going forward, we're still anticipating one more rate cut this year. They did two. Powell keeps talking about being in line with the data, but the data would have told him not to go not to go yesterday. So, if he's going yesterday and the data wasn't saying to go yesterday, then the idea of being data dependent is somewhat wrong.
Steve, what do you make of the quote divided Fed? I mean, is it a situation where you say, oh my gosh, they all can't agree and they're not getting in line and that's a bad thing and maybe Trump's pressure is getting to them? Or, hey, they're all really smart people individually and maybe they've got a different view and that's okay?
I think this is an interesting time, Brian. I usually am pretty sure what the Fed's going to do and why it's going to do it. And I think once it's decided on a case, I kind of get the case they make. I think you could make a good case in either place right now. When I look at some of the major economic indicators, they've actually begun to surprise to the upside. And that includes inflation, that includes wages, that includes industrial production the other day, consumer confidence snapped back. The one thing that is down is business confidence and capital spending, although that kind of bounced up a little bit. But year over year, it's down. And it's a little strange, I think, for the Fed to be making a case based on really a small part of the economy. But be that as it may, given the risks that are out there, I could see how you'd make the case. I can see how you make the case for standing pat now. So I think the divided Fed makes sense to me. Both sides have pretty good arguments. And you don't know who's right, Brian, until what? I don't know, a year or 2 years from now.
Yeah, I mean, Drew, does it bother you when you don't see this? Would you rather have the Fed be like a big happy family where Greg and Marcia and Peter and Jan, they all get along and it's fine?
But what I would like is as Steve's noting, that there are arguments on both sides, but I think a lot of the arguments Powell's making are in the future there might be this problem, so we're going to cut now.
Do you? How about this? Is Jay Powell a bad communicator? For his job, not as a human being, but for what he does for a living?
I don't think he's a bad communicator, but I think he's trying to articulate something that maybe is not entirely defensible. I mean, preemptive cuts for risks that are out there that are not currently affecting the economy. So one of my favorite data points is initial claims. If something's going wrong somewhere, someone will get fired. And you'll see that, and you'll have a lot of time to react to that initial firing. Mm-hmm. And instead, what we see is that the number of claims keeps falling and falling and falling and falling and falling. Maybe you should save the rate cut for when claims actually stop falling.
Drew?
Yes.
Drew, I could have taken either side of the argument that you're making. So I'm going to take the other side of the one that you made right now, which is what about this idea that you have the trade risk out there? And ultimately, all the world is much lower than the Federal Reserve. And ultimately, if you do cut, you have very little risk to the upside on inflation.
So I think there are two things that I'd make about that. First of all the consumer data is telling us they don't care about the trade war, and they're not seeing it. So
bingo.
That would be my first argument against it. The second is you can actually create more risk by trying to insure against risks that don't actually come to fruition. So in this case, they've given up 2 rate cuts that they could have used for the next economic cycle when there's actually a downturn that people can visualize or see or feel. And so they've given up some of their ammunition, of which they don't have a lot. And that means the next economic cycle might actually have more risk, not less.
It's amazing, Steve, because what Drew is talking about, I did a little Twitter poll. Who cares? Twitter poll, right? So just a couple hundred people that are sort of chiming in. I asked you, have you changed your buying decisions based on the tariffs? Have you changed your shopping habits? 85% of the people said no. Is there any real indication when you talk to all these Fed officials, even off the record, Steve, off air, you hang out with them, you're deep in, you're good at it. Do they admit the trade war has maybe not been as dire as some people had thought? Or are they really that worried about it?
Brian, I think that the opposite is the case. I think they're finding it to be more disruptive than they thought. Initial indications that I saw from Wall Street economists were, we're going to shave 0.1, 0.2 off the GDP numbers. We're going to shave, we're going to add 0.1, 0.2 to the inflation numbers, and it's really not that big a deal. What I think was unexpected from the trade war was the amount of uncertainty and the way it would affect CEOs and businesses. I don't think people would predicted the decline in capital spending, especially, Brian, in the wake of the tax cuts the president provided. So what I'm hearing is that for the areas that it's hit them harder. The idea, though, that Drew talked about, I think is 100% correct. It really has not spread yet to the consumer and has not really affected the macro in that regard. Where it's hit, though, it's hit harder than expected.
Final comment, Drew?
It seems like a recession of the elites. The average American's not feeling it.
No.
And cutting interest rates, I've made this argument before, cutting interest rates causes consumers to boost savings rates. If you boost savings rates, you'll get that recession because the more that's being saved, the less is being consumed, and you'll actually talk yourself into it.
Yeah. Steve, are we going to talk ourselves into recession? I mean, it's a great point, right? Just keep saying it over and over again until it happens.
I'm not going to be part of that, Brian.
Me neither, buddy.
I've been reasonably upbeat. I think the president did himself a disservice by promising 3% growth, which he was going to have a lot of trouble delivering. I think he had a shot at 2.3, 2.5. I think his trade war may have shaved that down to 2%. But in an economy where the potential growth rate is 2%, if you're delivering 2%, I think that's okay. I think the weird thing here is everybody expected a slowdown. A slowdown happened, and everybody said, oh, my God, we're having a slowdown. I'm a little bit confused by people's inability to understand. We had a major tax cut, a major stimulus to the economy back in 2018. That wore off. You got back down to trend. I don't know what's to be unhappy about.
I like it. I like the optimism. And by the way, at the Delivering Alpha Summit, Steve, you're throwing some optimism in there in the plate at 5:30 in the morning. It's spectacular. Thank you.
And a nice set of rolls and danishes right down the.
Can you send some this way? Because this is a Danish desert here out in Englewood Cliffs, New Jersey.
I'll put some in my pocket for you, Brian.
Please. I might walk over and get some. I need the steps. Steve, thank you very much. Drew, Matt, I love it. We're going to have the Matus Sullivan indicator, which is traffic on the turnpike and the crowds at Newark Airport, because there's people everywhere and trucks everywhere. Drew, thank you very much.
Thank you.